Today, we're diving into SoFi's market performance. We'll dissect the current data points, analyze what moved the market, and cover everything else you need to know.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert: this is not a financial advice video. SoFi experienced a slight decline today, closing down 1.38%. Despite this, it settled on a very strong support level, which we'll delve into later when we discuss the technicals. Although today's volume was relatively low, with 19.2 million shares traded compared to the average of 34.8 million. There were some significant transactions in the secondary market, especially those above $100,000. This suggests that large institutional players were active today. As we approach the end of Q2, it's common to see a lot of portfolio rebalancing by IOs and institutions. This week, we observed some of this activity, but it wasn't enough to push SoFi's stock price upwards. Today, there were no major news releases or SEC filings to influence the stock, so its movement was largely in sync with the broader market trends, particularly the banking sector. Yesterday's options activity indicated that many traders did not expect SoFi to maintain its levels. This was reflected in today's pullback, which, although anticipated, is still a bit disheartening. To hedge against potential declines, I sold some covered calls at $6.50, anticipating more volatility as we approach the GDP reports later this week. Short interest in SoFi increased slightly by 89,000 shares, bringing the total shorted shares to 184.8 million, or 17.8% of the free float. Despite this, intraday activity remained flat, with shorts making their move after hours. Interestingly, the available shares for lending increased to 6.6 million, up from 4 million, indicating that a large entity like BlackRock or Vanguard might have increased their holdings. Today, the options market showed a sentiment leaning towards bullishness, with 46% of the trades being call options. This suggests optimism among traders, even though there is a strong wall of resistance at the $6.50 strike price. This resistance is partly due to the market makers' efforts to suppress the stock below key strike prices, creating a vicious cycle of sentiment and short interest. Looking ahead, the next big catalyst for SoFi could be a potential rate cut in the September meeting. Currently, there's a 59.5% likelihood of a 25 basis point cut, down slightly from 61%. This decision could significantly influence SoFi's stock price. From a technical perspective, SoFi closed at $6.45, right on the S2 support level. The Elliott wave analysis suggests that SoFi might dip into the low sixes. Key levels to watch in the coming days are the $6.45 support and the $6.69 resistance, not accounting for the options market resistance at $6.50. For SoFi to break out of this cycle, institutions need to recognize its profitability and potential for future growth. This could stimulate some buying interest, particularly if SoFi announces any significant acquisitions or investments, given its substantial cash reserves. Retail investors, on the other hand, seem to be pulling out, which is a bit perplexing considering the potential upside. In conclusion, SoFi stock is currently in a state of flux, influenced by broader market trends, institutional activities, and technical factors. While there is some short-term volatility, the potential for future growth remains strong, especially with the possibility of a rate cut in the near future. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.